What's up guys, it's Michael here. In this video we're going to look at a brief update and what the federal meeting on the financial district was about. So in previous videos I made smaller updates on what the federal government was doing to do quantitative easing or quantitative tightening. And in this case they raised the basis points by 0.25%, and there are other YouTubers mentioning that Jerome Powell, the chairman of the Federal Trade Commission, and also what they're going to plan to do is in the next couple meetings they have within 2023, they're still going to try to fight inflation because their goal inflation is to bring it down to 2% on average every year. So this case, in this meeting, they raised it by 0.25%, and the next two meetings, a lot of people predict they're going to do it again. So for this year, we're going to see the same as the previous year, where they're trying to fight inflation by raising the interest rates. And what this means for economy, the economy now will slow down. So they're willing to make the sacrifice where unemployment is still going to skyrise, and also the housing market and the other markets are now going to be tightening down. And this is because they'll fight inflation. So there are many other videos explaining what Jerome Powell and the Federal Trade Commission are trying to do. But the overall of this video, to keep it nice and short and brief, the next couple of meetings they're going to have, most likely when it comes to the financial topics, they're going to raise the basis points again. And keep in mind that inflation, in general, how they fight it is don't fight the Fed, because the Fed will raise interest rates. When they raise interest rates, the economy begins to slow down. When they start to lower interest rates, which is predicted that most people say that's going to be 2024, in 2024, when they ease it back down to the original 2 or 3% what they have back then you look at 2020 or 2021, then that's the time where the markets are starting to shoot back up. I made a previous video showing that what happens when the US dollar is strong and what happens when the US dollar is weak. There was a graph shown by a study on the US economy showing how Bitcoin and stocks and the US currency relate together, how when the US currency is strong, stocks and bonds go down, and it's the opposite when the US dollar is weak. And it shows that what people invest and how do they work. So in this case, with quantitative tightening, where they started tightening up the money, is the same thing. So in this case, they're going to try to tighten the money and not let people borrow as easily. Basically mean they're going to have a higher interest rate to borrow, so it forces people to back off instead of borrowing money. That's it for this video, and the next Trade Commission meeting they have with Jerome Powell, then I'll make another update video like this again. See you guys next time.